In this video, I'll be walking you guys through my brand new indicator called the OGT Pivot Points, and it's absolutely free on TradingView. And we'll be going through how to add this to your charts, be going through all the settings and the settings I personally use to trade this indicator. But make sure you stay to the end of the video because I'll be sharing with you my 5 minutes day trading scalping strategy. I've never released this on the channel before, so make sure you watch to the end to check that one out because it has an absolutely insane win rate. So this indicator, for those who follow me on my Forex content and have my MT4 indicators, this indicator is very similar to the MT4 version. And if you do use MT4, you trade Forex, make sure you download that. I'll put a card up in the top right corner so you guys can watch that video after this one, so you can download it for MT4. The first thing we need to do is have a look at how we install the indicator. I've just added it to the scripts on TradingView, so I'm not too sure if it will pick it up already. Pivot Point. So it's called the OGT Pivot Points. If you don't see it here, it probably means TradingView have taken it down because it's not unique enough for TradingView. However, what I'll do just in case is put the source code text file in the description, and you guys can add this to your TradingView platform as part of your own scripts. Very easy to do. So once you've got it, I'm not going to click because I've already got it open on my charts. And if we have a look at the settings, so it is very similar to the pivot point standard indicator, which is the main indicator for pivot points on the TradingView platform. The main difference, and this is why I love this indicator, is because it has pivot points for the 1 hour time frame and the 4 hour time frame. So what that means is it will display hourly and 4 hourly pivots. Now, the reason why this is important or really, really good is that if you are a day trader or a swing trader and don't want to be in positions for a long time and looking for natural support and resistance levels, this is why you need this indicator, because displaying the 1 hour or the 4 hour, and if you're trading shorter time frames, it is a must to have on your chart. Even just being aware of these levels, and I'll prove it to you in this video why these levels are really important. And that's the main thing. The rest of it is all pretty much the same. We do have the S1 to S5, R1 to R5. You can change the line weight. I personally don't use these levels, but I know that there are traders in the community that I speak to that swear by these levels. And again, these, you can do it for the 1 hour and the 4 hour value. You can show the labels if you want. So it shows the P and it shows the exact prices. I don't really use that, to be honest, but it's there in case you need it if you want to check to see if a candle has touched the pivot point, which in one example that we'll go through, I kind of needed just to double check that it would have been a valid entry for the scalping strategy. So if I just show just the pivot points at the moment, and I've got the 1 hour, and again, we'll go through two examples, one on Forex and one on stocks as well, just to show you that this process works for all of them. Now, what I'm showing is just to show you here is I'm showing the last 24 pivots. So this is an hourly time frame. So this is looking at the last 24 hours and 24 pivots. And you can see here, similar to pivot levels. And again, for those who follow me know I talk a lot about pivot points because price naturally wants to go to pivot points. It's just the way it works. And about 70 to 75% of the time, price will hit its pivot in the time frame it was created. So for example, if we have a look at the current 1 hour pivot, you can see here that the low of this candle, I'm looking at up here at the top, that the low of the candle is 136.665. And I do actually need to put the labels on just to kind of prove my point there. It's the wrong one. Show the prices. You might not be able to see that price if I'm really honest with you. I can't see it. I really can't see it. And again, this is why, I should probably spend more time trying to do my videos there. But probably the worst example there, but if I zoom in slightly, you might be able to see it, that in the first 5-minute candle that we have pretty much touched its hourly pivot. You can see that the hourly pivot was touched in its hour. This is what's called a missed pivot. And what this means is price never touched the pivot in the hour it was created, which means that price will have a tendency within the next, in this example, 1 to 3 pivots or 1 to 3 hours. It's a high likely it's in the high 90s that price will get back to this level because it likes to touch old pivots. And again, we have another missed pivot here. You can see the pivot was hit, pivot was hit. This was a missed pivot, but the next hour, the pivot was taken, the pivot level was taken out, pivot was hit, pivot was hit, pivot was hit. So if we go back and have a look at this, you can see in majority of the cases, price hits the hourly pivot or hits the hourly pivot 1 to 3 hours after the pivot was made. Now, just imagine knowing that information when the next hour pivot is created, which is above or below that price, and you have a high probability that price will hit that pivot, trading to that pivot level, or if you're in a position already, using that as take profit targets or potential stop losses, that information is very valuable. And again, the same logic works for hourly time frames. And, and a lot of the stuff I do when I trade options and saying strike prices and various other things, I use pivot levels to make sure I'm out the money, in the money, and all this kind of good stuff on there. But where this particular indicator shines is mainly down to we're on a 5-minute chart, and this downtrend would have been perfect pullback opportunities. This level here, touch the pivot, touch the pivot, touch the pivot. So in this whole downtrend, you had 3 opportunities to get into this trade. Knowing that information is absolutely valuable in terms of your trading, especially if you're a day trader or a scalper. Now, with that being said, I'm going to walk you guys through my 5-minute scalping day trading strategy. And the way that this works is, I took it off the wrong one. That's why take that one off there. Perfect. So the way that this works, you need 2 indicators. First indicator I give to you for free, it's the OGT Pivot Points indicator. The second indicator is the RSI, and I use the traditional 14 period. I've not looked to optimize this strategy. 14 period tends to work pretty well. If you're looking for more signals, you might want to decrease the RSI, so therefore you get more fluctuations for overbought, oversold levels in there. And it's a 2-part strategy. What you're looking for as the first point is waiting for the RSI to be overbought, i.e. above 70, or oversold below 30. When that happens, what you need to do is check to see that the current hourly pivot has not been hit. Say that again. When the RSI goes to oversold, in this example here, you can see here it's at 27.95. So this big red candle here, the current hour pivot, which is this pivot over here, has that pivot been hit by price? And in this example, it hasn't. That is an opportunity for you to enter, in this example, long with a take profit target of the pivot point, of that hourly pivot, with a stop loss the same distance, so a 1-to-1 ratio underneath that pivot level. So in this particular, so when I look back, I'm looking back at the last 24 hours. So in the last 24 hour, there were 2 valid trades. There were other opportunities, but we'll go through those to show why these were not valid entries. Is that, so when the RSI became oversold under 30 at 27.95, this pivot was missed. So on the next bar, you enter a long position with a take profit target up here, which is what's that, 12.5 points. And then what you're doing here is doing a one-to-one reward to risk of putting a stop loss underneath there. And in this example, price did go against us slightly. It went deeper into oversold territory. And then as you can see here, it went back up. And as you can see, it used it as a resistance level to come back down again. And this is why it's so important. We see this so many times and loads of examples of where price likes to get attracted to its pivot level. So that is the premise of the strategy. You wait for the RSI to be oversold or overbought. Once that happens, you then go and check the current hourly pivot. If it's been hit, it's no trade. If it has been hit, it is a trade. So let's continue going back and we'll look at this particular example over here. You can see that I'm looking at the RSI level over here, that the RSI went below 30 at 28.92. Now, I need to make this just a bit smaller so we can see that hourly pivot. Now, if I show you there, the hourly pivot is, so it's this bar over here that was created. This was the hourly pivot. As you can see, price already touched the hourly pivot within that 1 hour. It opened at that pivot and continued to go down. And then it continues to be oversold until this there at 28.77. But you can see even at this bar over here, we're still in that current hour. So therefore, this is not a valid entry. So now we go further down. Now, if we look at this particular bar here, so this bar went completely gung-ho, and you can see it went overbought. But you can see here that the bar was made on this pivot, and price had already hit its hourly pivot, therefore making this a non-valid entry. Then the next one is over here, where you can see that price becomes oversold here. And I checked this before, it just missed it by, not even half a point. So therefore you would enter in, you got your take profit target at 1-to-1 risk to reward. And you can see here that we do go back into a bit of drawdown, but then we just have this massive move up into it. Even though it was created in the next hour, that pivot was hit. So that's how it works. It's a Forex example. And again, if we go here, I'm just taking Netflix. And again, I'm just looking at, have a look. Is there any other chances? I don't think so. Well, but we'll have a look in the last couple of days. So this one happened today. You can see here on this bar, the RSI went above 70 at this point over here. So, and we can see here that this was actually the second bar here, the second 5-minute candle. So 10 past the hour. And you can see here that was not hit. And this one was a nice trade, had very minimal drawdown, happened very quickly, 5, 10, 15, 20 minutes, bang, straight to that pivot point. And again, you can, in this particular example, you can buy a put, you can look to do a call credit spread, you could just buy the shares and trade the shares as some people do. All of these other different things. And was that an example here? Yep. So this one here went above 70, this candle here. But you can also see that in this hour, this pivot was already hit and therefore would not be a valid entry. And therefore, then we had this one here, 69. This one missed it, but it wouldn't have been a valid entry because price was already at the first beginning of that hour. And what I found using this strategy is it works best in like kind of range bound, where if you look at the previous pivots, they've all kind of really been hit. If you get extreme moves, they're a bit more harder to kind of trade. So again, partly is down to intuition and sticking to your rules. But if you are a beginner and looking to a particular strategy or a day trading strategy, I would recommend something like this, as it is a very, very good strategy, easy to implement, and very, very high win rate because price is attracted to its pivot points. And I want you to comment down below. Let me know your thoughts on this strategy. Let me know your thoughts on this indicator, how I can improve it. Make sure you like and subscribe, and I shall see you guys in the next video.